we have an electrical contractor, Joe Ager and I. This is a little bit outside of our buy box. We actually looked at this back in December, and the broker, we ended up having a whole bunch of questions, and broker's like, yeah, we've had those same questions from several different people. And so they pulled it off the market. And so that's when we really honed our buy box into HVAC. And so that's been our real focus. But obviously, this kind of fell back on our laps here in the last month. So we decided to take a look at it while we get our off-market deal flow going. So a little bit about us. Joe Ager has over a decade as a life insurance actuary. He's a real estate investor, family man, a badass MFer. And if you guys don't know, he's an expert t-shirt designer. He's made t-shirts with for Chris, for Carl, with their faces on them, for Abraham, etc. Right? So, and the other thing, so I guess a little bit about me. I've got almost a decade in real estate, over 6 years experience in electrical HVAC industries. Little Tommy Boy reference. I don't take no shit from anybody, and I'm a car guy. I'm a car guy, master car buyer. Love cars, everything to do with motors. A little bit about the industry. The CAGR of electrical trade is 3.94%. Their market size by 2028 is projected to be at 283 billion. So not crazy growth, but still growing healthily. The business background. So this electrical contractor was founded in 1977. They serve commercial at about 45% of their revenue, residential, same thing, about 45%, and then industrial at about 10%. They operate in half a dozen states in the Southeast. They're certified Generac generator installers. They worked with many franchises such as Dollar Tree, Red Lobster, Chili's, Starbucks, Burger King, Ruby Tuesdays, Toll Brothers are some of the builders, and they have several other builders that they work closely with. Their average contract is between 30 and 50,000. And then on to business growth for us. So these are some of the kind of preliminary things that we see that we can add to this, and is going to be our main focuses. So we want to grow the all three pillars, the industrial, commercial, and residential pillars of the business in each state that they currently operate in by seeking new partners with builders in each state. Then we're going to transition to performing more remodel service and service work. Basically, they're right now, their service work and remodel work is less than 10% of revenue. So they're heavily relying on all new construction in every single pillar. And then one of the other things we want to do is offer an annual service contract to be able to perform all electrical service work for those clients that they have. So right now they don't necessarily follow up or have a contract that makes them exclusive with the people that they're doing the work with, right, with current clients. So being able to have like a yearly service or biannual service contract with these people just to be able to perform maintenance and whatever else pops up for them could be another revenue driver. And then last but not least is develop a referral program. So basically when we start implementing more remodel and service work, we want to be able to develop that referral program to basically, like, whether it's offering them $100 off if they, refer someone and do a phone introduction right there. We got this idea from $100 Million Leads by Alex Hormozy, and it seems to be a great potential revenue driver. Our secondary focus is going to be to roll up other electrical businesses. And then from there, we'll end up bolting on HVAC and plumbing, just because obviously they serve each other and we can cross sell. And with the eventual idea to reach 18 to 20 million in EBITDA with plans to exit within 10 years. So some potential issues. It's a broker deal. It's a broker deal. It smells like a broker deal. The broker has been pretty helpful, but also has lied to us several times, saying, hey, yeah, we have an offer at $5 million, or we have an offer for 4.5x, and then obviously nothing to back that up. And then when we ask questions, they get back to us within 15 minutes. So another potential issue is the revenue trend. Year over year revenue is declining, as you'll see in the one sheet. And then add backs, there are some material add backs for day-to-day business expenses versus discretionary spend. Some strengths and weaknesses. Strengths, we have experienced licensed employees with tenure. So we have 2 licensed master electricians in Georgia, and one of them has been with the company for over 24 years, the other over 14 years. So they've been with the company for a while, which is great. And I think they only have a handful of employees that have been there for less than 5 years. So they have a strong reputation because obviously they were established over 40 years ago. And their high customer satisfaction, because that's really their main focus is satisfying the customers that they have. That way they can keep those relationships going and keep going with those new build projects. They do have a wide range of service projects, so small and large. Small being like a wiring for a hood vent at a commercial kitchen or something, and large obviously being from ground up electrical full on installs in large commercial buildings. They do offer 24/7 emergency services. We haven't been able to dive into this and see how much of their work is emergency work, but this is something that they offer. And like we said before, the business was established over 40 years ago. So they do have strong brand awareness in the industry. Some potential weaknesses. So obviously they rely on new construction market, right? So 90% of their revenue is from new construction market. The owner holds licenses in 5 other states, right? So the master electricians only have the state of Georgia, which this can be looked at as a positive and a negative. The positive being that then we can incentivize the current workforce to go and get licenses in other states to be able to earn more income, and potentially do revenue share. The downside is maybe we have to keep the owner on to be able to work under those licenses for the time being. So another potential weakness is obviously supply chain issues like we saw with COVID, and some of these issues are still lingering, especially the skilled labor shortage. That's definitely still lingering, and that goes nationwide, and that's going to be something that we have to address. So our ask, what we're looking for partners. So we're looking for equity partners. We definitely want to eventually have an operating partner, and we definitely are looking for strategic partners. So equity partners, we have not quite pitched numbers yet. We are not under LOI on this. But when we do, what we're thinking is the way that things are looking, this is most likely going to be an SBA deal. And so we're looking at probably 10%, if not 15%, for equity partners. And then operating partners. So currently they have management in place and they are running the day-to-day. The owner doesn't necessarily need to be there. He just enjoys, playing in the dirt. So every once in a while he'll, jump on the excavator and help dig a trench or something. But he does not need to be involved in the day-to-day. So strategic partners, what we're looking for is obviously somebody that wants to be part of a roll-up and bolt-on scenario. So if you're in the plumbing industry or HVAC, even electrical, we're looking to roll up and make this obviously a larger business than what it is.
Cool.
So the numbers, quick glance at numbers here before we get to the one sheet. So 2021, you can see revenue was 9.3 million with adjusted EBITDA of 1.1. And then 2022, it dropped by just over 400,000 in revenue, but the EBITDA jumped. And their explanation for that was that they had a lot of workers leave in 2021, and they ended up using a whole bunch of subcontractors. And then in 2022, they were able to hire out some more guys and keep a lot more of that profit in-house. And then obviously 2023 has dropped again by over 500,000 in revenue. And then EBITDA has dropped by about 600,000. So the explanations that we were given for that was that they have their contracts, their industrial work varies year to year, which impacts gross numbers greatly. And then obviously for 2022, 2023, you can see that the company shifted work from in town to the suburbs. And so they wanted to kind of mitigate some of the problems they were having with the cities and the permitting process for the work that they do. As some of you may know, permitting can be very slow when you're in a major metro area. And then when you get out to the suburbs is way way quicker and a lot easier to deal with. So that has been one of the things that they changed. And then commercial, so they reduced management and then balanced the workload to match. That was another thing they gave us for the drop in revenue. And to us, that kind of sounds like, hey, we had some guys leave or quit, and we weren't able to replace them, and so we couldn't take on as many jobs. Okay, and now we'll go to Joe Ager for the one sheet.
Perfect. Thanks, Joseph. All right, I'm sharing the one sheet. Hopefully everyone can see it. If not, just yell at me. So a few high-level comments before we get into the numbers a bit more. This is an S Corp, so obviously different taxation than a C Corp. The SIM did call out that an asset sale would be preferred. Obviously, we're hoping that we're not, kind of pigeonholed into picking one structure, and it's kind of open and we can determine what's a win-win for both sides and potentially look at a stock sale as well. The reason that the current owner is selling is an early retirement, essentially. The owner's late 40s, early 50s. He thinks he brought the company as far as he could for now and wants to spend more time traveling with his family. That combined with the fact that he's mostly absentee, he doesn't need to be working in the business. He just chooses to work in the business and likes to play in the dirt. And he doesn't travel outside of the state with his crews because it interrupts his fishing trips. We do think that there is a fairly low motivation to sell here. We're still waiting for our first seller call. I think once we submit our IOI, we'll be able to do that. So we already talked about the revenues and the EBITDA. Obviously, things are decreasing. We did get some explanations that Joseph went through, and this is also a project-based business, so that could lend to it as well. Maybe 2024 is a great year and it pops up to 10 million. We just don't know. The biggest concern for us right now, or one of the largest concerns, is the ad backs.
Yeah.
There are fairly material ad backs between 150 and 200K each year. And they're all just day-to-day expenses that are supporting the top line. They have things like office, advertising, utilities, subcontractors included in those ad backs. So that's definitely something we need to push back on. But for right now, we're taking a lot of that at face value because we've been getting a lot of pushback from the broker. Even though Joseph said we don't take no shit, we haven't been trying to take any. But he's kind of hiding behind the guise of an IOI, trying to make sure we're serious. So we are drafting that, and shout out to Team Hangman members for sending us some templates as well. We're going to do some cross-referencing just to make sure we have all the information there, and then send that over to the broker, and then hopefully open the floodgates to some more information. But taking that at face value, we're taking the most recent year of adjusted EBITDA in our valuation just because of the dip from 2022 to 2023, and we're using a 3x multiple here. Definitely open to feedback on that. We did do some looking into deal stats with Search Funder and saw about 5 different transactions in 2022, 2023 in the same industry, same revenue range that were about a 2.5 to 3x multiple. So we're being conservative there. And then for our adjustments, we obviously have, the cash deficit. This will be a cash-free, debt-free deal, but cash on hand is so low that we just, didn't really modify that and kept it as is based on the spreadsheet calculations. And then the real estate's all leasehold improvements. It's not referencing any buildings owned by the company. However, the owner did just buy property, and he's moving this business into that new property next month. So that says a few things. Maybe he's focusing more on real estate, wants to sell the business, get cash, and have a guaranteed tenant, which sounds pretty smart. Or, the business isn't really for sale. The motivation's super low like we thought it was. And obviously we hope that's not the case.
Couple of questions for you. Can I ask you a couple of questions? So you're not buying the real estate, you're just buying the business, correct?
Correct.
And then what's the asking price on this business?
Yeah, was about to get there next. They haven't told us an asking price. Seller and broker are saying that they would just want bids on what they think it's worth. But like Joseph mentioned, the broker's been telling us they've been getting offers for a 4.5x multiple and another offer for $5 million. So we think that's a leading indicator on what they're actually looking for. And if that's the case, we do think it is overvalued based on the numbers we're showing here.
Yeah. Okay. All right. So I like the business. I like the fact that you're looking to grow it organically with contracts, recurring revenues, and you've got some acquisitions that you're potentially looking to make. I really like that. I think rolling up in home services, in construction, is always really good. I like the fact it's multi-state. I love the $20 million EBITDA target. Can probably exit for a $200 million valuation. I think you can get around the licensing issue by maybe letting the seller keep 5% of the equity. Silent partner, then the master license can stay across the other states. I think that would be a problem if he completely exited. You'd have to figure out how to get a new master license across the other 5 states that this business operates in. So I do like the business, but there's some issues, right? So I never like to see businesses decline in revenue but increase in EBITDA, right? So they dropped $1 million almost of revenue in 2 years, but their adjusted EBITDA went up a couple of $100,000. Yeah, there's some significant add backs in there. You would need to vet them. But I think the biggest challenge in this deal, and you've alluded to it, is the MUD score's too low, right? The motivation is not as high as it needs to be. There's obviously some financial things you need to figure out. You know, it's starved of working capital. The AR is really high, which people have mentioned. And have you done a transfer of value analysis on this?
No, we haven't. We have fairly limited information, enough to, kind of do an initial evaluation, but we're looking for that first seller call, which would allow us to start digging into that.
Yeah, I think $3.5-4 million is probably there or thereabouts as an average or above average kind of business when you look at transfer of value. I think though, be worth you doing that. The customer concentration's pretty high. I'd love to see what systems and processes this business has got. I think it's probably average or below average multiples. So yeah, 4 million might be a little bit on the high side. So this is definitely a green light for me. It's not a high one, just because I think there's some hairs on this burrito, as somebody said to me the other day. There's some flies on this deal. I think you need to investigate, but it's definitely worth continuing the pursuit on this. I'm just worried the seller psychology is not there, to really get a deal.
Agreed.
Maybe he's holding out for a big trade buyer or somebody that's already rolling up to come in with a bigger offer because they've got all the leverage and the synergies that you would expect. But let's get some other input on this. Kyle, what do you think? Kyle, you still there? Nope, I think we lost him. Let's go to David Gerald. David, what do you think?
Yeah, same observations. I did have to step away for just a minute, so I didn't catch the whole presentation. But looking at the numbers, one thing you have to be careful about any of these service delivery or construction trades delivery type businesses is are they properly doing some form of work in progress analysis on their financials? Because a lot of this variability that we're seeing in the gross margin could just be timing issues where they're recognizing COGS and revenue in different periods because of the timing of their billing. And there's a proper way to account for that, but a lot of smaller trades don't do the proper accounting, and that can really skew your numbers. I am curious what the that $300,000 in other current liabilities is. That's a big chunk of the balance sheet.
Yeah, a smaller portion of it is payroll liabilities. I think most of it's credit card.
Okay. So obviously cash position we've already talked about. For doing commercial work and doing construction work, the AR actually seems to turn fairly decently. I'm not shocked or horrified by 68 days. I'd like it to be better, But for trades, it's not table. I'm kind of like Carl, it's not. I want to understand kind of what's going on with the volatility and see if that's a numbers problem or a more fundamental problem with the business. Then the question is, yeah, are they really here to get a deal done, or are they really just running it up the flagpole and see if they can get a salute?
Perfect. Thanks, David. Darren Yee, what do you think?
Yeah, sorry. Much like David, I had a phone call come in too, so I apologize. I did miss some of this. But from a numbers perspective, I think you guys' valuation is fair on it. The broker side of things always makes me a little worried, right? They're slipping out maybe 5 million, right? Kind of a situation. You're probably about a 3.9. I'd give them an offer just to see what they say. It at least opens the door to start that conversation with them. And, maybe there's some middle ground in there. I don't know if you covered any, like, your financing side. I apologize. What is your debt? I'm sure you're covering your debt service, no problem. But what and your what is it?
Yes, this isn't like, the specific SBA tab, but this is just what the initial indicators are with the
Okay.
spreadsheet. And we do anticipate this being an SBA deal.
Yeah.
Just don't think the MUD score is there for an annuity unless we're just misinterpreting why he wants to sell the business, and the balance sheet's not strong enough to support a meaningful LBO.
I think it's worth
Yeah.
a tip off the strategy, guys. I do. I think that $5 million ask might be worth you going in at 5.5 on the annuity, and then coming in. Yeah, I think it would be probably. I don't think it'd be high as 4. I think be probably low. I'd go in at like low 3s, maybe 3.1 as an SBA offer, and then just kind of flesh them out where they're at. So I like Darren's idea of just putting something in there just to see what they think. But I try and do a quick transfer of value analysis first. I just get a sense on where you think that multiple is in the ranges. I'm guessing it's average or below average. So I think this business might only be worth maybe a 2.5 times multiple. That's just my guess off the limited information.
Yeah.
Perfect.
Alrighty. Thanks, guys. David Vario, anything to add?
Yeah, I think that I like the business. I like the your vision. You guys, I'm assuming you don't have deal heat on this, and you have other things in play because you got a strong team. So I think that you can pretty much go anywhere. So I wouldn't we get bogged down. But you might want to try and sell the guy on your vision, and let like Carl said, let him retain 5 or 10%. To maybe incentivize him to get a second bite at the apple. That's the only thing I can think of to add.
Thank you.
All right, perfect. Does anyone have any questions on this deal? Anybody in the group want to come on and ask a question? Conscious of time, so I want to keep moving on to the other deals. But no, nobody got any questions. All right, guys, we'll get your votes in. Great presentation, by the way. I think that real standout presentation, very thorough. Love the vision, love the strategy, great use of the tools. It's definitely a green light for me. I'm going to go green light 45. I'm just worried about seller psychology, and I think there's a little bit of financial analysis that you need to do just to fully vet this. But definitely worth a punt in my opinion. Let's just see while everyone's voting. Mostly green lights, guys, which is what you would expect. Margins are pretty good. 15% margins are solid, right? But as I said, I always worry when revenues drop $1 million, yet adjusted EBITDA goes up. Like, what are they doing differently, right? Have they cooked the numbers just to get the higher valuation? Yeah, I always worry about stuff like that. But let's see. All right, guys. Well, excellent job.